Hello everyone, today's video is all about charitable giving. So gifts to charity and specifically the tax reliefs thereon. So let's dive straight in. First one is gift aid. I think most people are familiar with gift aid as a concept, but let's have a look at exactly how does it work. So let's take an example of a £100 donation. So £100 donation to charity that you as a taxpayer make. Now, when you've done this thing on a form, or nowadays it's all online, isn't it, through Just Giving and the like, you tick a box that basically says that you want gift aid to apply. So you tick something to that effect. What does it actually mean when you do that? Well, what it means is that for the charity, it means they can recoup another £25 in this example of a £100 donation. So £25 is what they claim back from the government. So the government give them another £25. You've given them £100. The government give them £25. In total, they've got £125. But in order for them to get that 25 from the government, that's when you have to click the button on the website or the box on the form that says claiming gift aid, and the charity gets the other £25. Right, so far so good. So what about for you though? Is it any better for you, the fact that you've given this £100 under gift aid? Well, yes it is, because you can get tax relief on that contribution. So the way it works is that if you are a higher rate taxpayer, that contribution of £100, you get 20% of the gross amount being 125. So even though you put in 100, that's called the net contribution. The gross contribution, including the bit that's given by HMRC, by the government to the charity, 125. So you get an extra 20% of that. Now, how that strictly works is on your tax return, you basically put on the amount that you paid to charity, but the gross amount, the 125. And that £125 delays the point at which you go from being a basic rate taxpayer to a higher rate taxpayer. So it just delays the point at which 40% tax kicks in. So you're paying 20% tax, i.e. the basic rate, for that much longer, for an extra £125. So the tax saving is the difference between paying 40% and paying 20%, i.e. 20%. 40 less 20 times that 125 gross donation is £25. So that £100 donation only really cost you 75 because you're getting 25 quid off your tax bill. Only cost you 75, but the charity ends up with 125. So it's a win-win situation because you're getting 25 quid off your tax bill. The charity is getting an extra 25 on top of the 100 that you've given them. So win-win all round. So that's how gift aid works. Now the next one, I would suggest not many people know about this at all. But this is charitable gifts on death. So when you bequeath some of your estate when you pass away to charity. Now we've seen things in the press and in the papers of eccentric people leaving millions of pounds to the dog shelter or the Cats Trust or whatever it is. But actually, if you do want to leave something to charity, it's tax efficient from an inheritance tax point of view. So the rule says that if you give away more than 10% of your estate to charity when you die, the rate of inheritance tax on the remainder of your estate is only 36% instead of 40%. So the default IHT rate is 40%, but if you've given stuff away to charity, that drops. So you've got to give away at least 10% of your estate for a 10% reduction in the IHT rate to apply. 10% off 40% is 36%. So here's an example. Let's say you've got an estate, someone passes away, £900,000. £900,000, they've got a nil rate band of 325, forget transferable bands to spouses and anything else, just assume one individual, 900 grand estate, knock off the nil rate band, 575 taxable to inheritance tax. At 40%, that's an inheritance tax bill of 230,000. Now, assuming the same individual instead decided in their will that they want to bequeath 90,000 to save the children. So with that gift to charity when they die, how does that alter the IHT calc? Well, you take the 90 grand off the estate to start with. So you go from 900 less 90s, 810. So 810 is now subject to inheritance tax. That gift to the charity does not form part of your estate. But, like I said, it's better than that from an IHT point of view. Not only does the gift come off, but the rate reduces. The rate reduces to 36 instead of 40. So 36% on the balance. You've got a tax bill, or your executors have got a tax bill of 174,000. So tax bill with no gift, 230. Tax bill with the gift, 174. So there's a saving there of 55,000. So that £90,000 gift only costs the estate just shy of 35 grand. That's the true cost of making that 90,000 gift. So very tax efficient. From an inheritance tax point of view, when you give to charity on the event of your death. But for this to kick in, you have to give away at least 10% of your estate. Now, another little well-known tax break on charitable giving is also the gifts in lifetime, not just of cash, which is covered by gift aid, but gifts of other assets. So gifts of listed shares or gifts of property. So you can give to charities stocks and shares listed on the stock market and properties that you may have. And the tax rules say not only will you get an income tax relief for that on the value of the properties or the assets, the shares that you've given to the charities, it'll reduce your income tax bill, but also there's no capital gains tax, because normally if you offload assets such as properties, there will be capital gains tax to pay. But in this case, if you are donating the assets to the charity, no capital gain, and it will reduce your income tax bill as well by the value of the property that you're giving away. So let's say you're giving away some stocks and shares worth £10,000. That 10,000 will come off your taxable income for the year. So whatever you're subject to tax on, knock 10 grand off the value of those listed shares that you've given to the charity. So all in all, tax savings all round for gifts to charity. If you like this video, please do subscribe right about there, and I'll see you soon.